Hello, in this lecture we will take a look at Chapter 2, Accountants as Business Analysts. We'll take a look at the definitions first, starting with the business process, a defined sequence of business activities that use resources to transform specific inputs. So the business process is going to take specific inputs into specific outputs to achieve a business goal. So that's the generic name or definition of the business process. We're going to take the inputs, we're going to convert those to the outputs to achieve the business goal. Business analysis, the process of defining business processes, requires requirements in evaluating potential improvements. So we're going to analyze the process, look for improvements in the process. Business model, a simple abstract representation of one or more business processes. So we're going to make models of the processes so that we can visualize them more clearly. Documentation explains how business processes and business systems work, a tool for information transmission and communication. So then we're going to document this information. Importance of business process documentation. Sarbanes-Oxley of 2002 made documentation essential to businesses. Requires managers to assess and attest to the business internal controls. So Sarbanes-Oxley is a regulation that focuses heavily on the reporting of internal controls in a way that is intended to add confidence to financial statements and businesses through limiting, among other things, fraud. And the idea of that happening is through a system of internal controls that will have some checks and balances within the system. So it requires external auditors to audit management assessment of the effectiveness of internal controls and express an opinion on the company's internal controls. So we're going to need auditors to give an independent opinion on the internal controls as part of the auditing process to see whether or not those internal controls are effective, implemented, and being run properly. Value of business models. So we have a graphical representation, present information more concisely and clearly than written documentation. So we want to see things pictorially. Pictorially does give us a visual aspect and give us some more information. So we're going to use those types of models. Manage complexity by incorporating only essential elements. So we want to get the thing down to basically its bare bones so we don't have the excess of information that could really muddy the waters when we're looking at and making decisions. Simulate potential changes so we can easily make changes within a visual system. Specify requirements for the actual business process. So activity models. Used to analyze business processes and design changes since well before the 1920. Describe the sequence of flow work in a business process and represents the sequential flow of control of central logic of a set of related activities. So this is going to process the flow of the activities. Tools for planning, documenting, discussing, and implementing systems. So then we have the activity model. So we're going to variety of activity models are there, changing as technology changes. We've got the old flowchart types models, we've got the data flow diagrams, we've got the business processing maps. Activity models must be able to describe events that start, change, or stop flow in the process, activities and tasks within the process, the sequence, the order of flows between tasks, decision points that affect the flow, division of activity depending on organizational roles. So we have the BPMN for activity diagram. That stands for the Business Process Modeling Notation. The Object Management Group maintains the Business Processing Modeling Notation specifications. First specifications issued in 2004, widely adopted. So this is a way of standardizing the modeling process, and in so doing we can standardize across companies and firms, and we can start to use standardized software in this way. So we can specifically design for process modeling. It's designed to be understood by business people and software available to support modeling and sequence process simulation. So we have the BPMN building block events. So we can talk a little bit about some of the modeling aspects here, and we can read a bit about more of this in the text. Events include start, intermediate, and end events. Intermediate events affect the flow of a process but do not start or end. So obviously most of the processes are going to have a starting point, an ending point. We can have a flow point here, but that's not going to be the start or the ending point. Activities represent specific steps in the business process. Basic activities are modeled as rounded rectangles. Each activity is described with a short verb phrase. So we're going to have a short verb being the activity here. And then we have the building blocks. The sequence flow represents by arrows to indicate the progression of activity within the process. So of course we're going to have the progression with the arrow. And then we have the building blocks gateways. So show process branching and merging as the result of decisions. So usually gateways appear as pairs on the diagram. The first gateway shows the branching and the second gateway the merging. So this is where a decision could be made which would break up the paths, and then they would come back together. And let's look at an example of these items. We start with the customer present items. We're starting here, scans items and identifies the payment method. And then of course we have our gateway, because they could pay with cash or they could pay with credit. And then we're going to close up the gateway back here, and then we'll move on to the bag items and close out.